Hello and welcome to the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland. Today's panelists are Mark Bowman, our Global Market Specialist, JP Steiner, our Associate Economist, and Mark Soderberg, our Senior Ag Market Specialist. Starting with the grains market, Mark Soderberg, how will trade negotiations and the tariff deadline impact trade in the ag space this week?
Thanks, Jeannie. With the July 9th deadline looming and still a lot of uncertainty with trade discussions going on with several of our key trading partners, this morning Treasury Secretary Vicent stated that the actual implementation of these reciprocal tariffs will not go into effect until August 1st. However, the president and his team are working on setting what these rates will be right now, with an announcement perhaps looming here on Wednesday the 9th. So this would seem to imply that the reciprocal tariffs on these individual countries could be different than what was outlined in early April. Vicent went on to state that they felt several trade announcements could be made in the next couple of days, and like the one announced with Vietnam last week. Over the weekend, progress was made with the EU. The president of the EU Commission stated that he and the Trump administration had a good exchange while hoping to reach a deal before Wednesday's deadline. And Commerce Secretary Lutnick also, in discussions with his counterpart from Japan, had some good progress, and they're to look to avoid the higher reciprocal tariffs on Wednesday. It was previously announced at 24%, but President Trump has threatened to go even higher. Japan is our second largest buyer of U.S. corn. So overall, to me, it just appears that trade talks are progressing with individual nations. And as that happens, I think the Trump administration will continue to kind of kick the actual implementation of these higher rates down the road, including that with China. Markets are sharply lower this morning, I think largely due to the fact that President Trump did not announce a trade deal with China at his rally on Thursday night, and couple that with favorable weather here in the U.S., prices giving back all the gains made last Wednesday and Thursday.
All right, Mark. What are a few of the key items you'll be looking for in Friday's USDA reports?
As I mentioned last week, I don't think we're going to see any changes to either corn or soybean yields. So any changes in production will be slightly lower, just based on the slightly lower acreage data we got at the end of last month. For winter wheat, I look production to slip a little bit. I'm at 1.355 billion. That's down 27 million bushels from June. This due to the lower harvested acres, cut nearly 900,000 last week. My yield forecast is up a little bit, 54.5, and if this is realized, this would be the first time the USDA cut winter wheat production in this July report in 5 years. In corn, I'll be most interested to see just how much the USDA raises the Brazilian production forecast after holding steady at 130 million metric tons in June. There have been several private forecasts coming in much higher, one even as large as 150 million metric tons, far exceeding their previous record production at 137. Eventually, I think the USDA will gradually raise this forecast up to about 140. As a result, corn exports will find plenty of competition in the global marketplace. So I think the USDA is going to cut that export forecast 150 million bushels this month. I'm at 2.525 billion bushels.
All right, thanks, Mark. Moving over to financials. JP, in contrast, how will this week's tariff deadline impact the financial space?
Yeah, I'd say the financial markets are likely to experience a high level of volatility in reaction to this week's tariff deadline/announcements. Back when President Trump initially announced his Liberation Day tariffs, U.S. equities saw a historic sell-off. The S&P 500 lost $4.7 trillion in market value, with the Magnificent Seven stocks alone losing over $2 trillion in market value just between themselves. The bond market also experienced a dramatic surge in long-term yields, signaling investor concern over inflation and economic disruptions as a result of the tariffs. The 10-year yield had jumped from 3.87% to 4.47%, in just 3 days, which was the largest spike since 2001, while the 30-year yield also climbed to its highest level since the 2020 pandemic shock. Notably, too, is that the spike in yields was so alarming it reportedly influenced President Trump to pause the tariffs a week later. Now, given the past reaction to what happened during the first announcement, I think the level of reaction will depend on how underwhelming or overwhelming the level of tariffs for some countries are, and whether or not they are on a major trading partner or not. EU officials, like Mark had said, have cited substantial progress in trade negotiations, but have also reportedly resigned themselves to the 10% tariff on the trade bloc as they continue to advance their trade talks with the U.S. While Canada had rolled back its digital services tax in an effort to kickstart negotiations with the U.S. again. If major allied trading partners see a tariff above 10%, then I would expect markets to react similar to how they did previously, and I would pay close attention to the bond market, which is also having a 10-year note and a 30-year Treasury bond auction this week. The 10-year Treasury note auction is taking place at noon Central Time on Wednesday, which is also the deadline of the tariff, or the same day as the deadline of the tariff announcements, while the 30-year bond auction is taking place a day after the deadline. A negative reaction to these tariffs could have the impact to really hurt demand at these auctions and contribute to a spike in yields and cause another sell-off in the equities. So I think we just have to wait and see what the level of tariffs are and whether or not they're going to be on a major trading partner.
And JP, in your opinion, is the tariff deadline final?
Yeah, so as Mark also touched on too, recent comments from several administration officials, including President Trump himself, have signaled that there may still be some leeway for countries to negotiate their trade deals further after this week's deadline. President Trump announced that the tariffs would go into effect August 1st, with some trade letters being sent out even as early as noon today, that being noon Eastern time, saying a dozen or so letters could go out this week. Notably, too, is that Treasury Secretary Scott Bessent said on Sunday that the tone of the letters being sent might not be a final declaration of immediate tariffs on dozens of countries. Instead, Bessent said that the letters will feature another deadline that trading partners will have to meet to come to a deal with the U.S. to avoid the same so-called reciprocal duties originally placed back in April. Now, the mix of comments have sent messages to the markets that this week may be unlikely to provide any finality on the trade agenda. However, I think only time will tell when it comes to this, and markets will just have to continue to wait and see what the White House says and does.
I agree. And lastly, moving over to softs with Mark Bowman. Mark, what can reverse the downtrend in sugar?
So the sugar market has endured a steep sell-off from the March highs. We've had improved growing conditions in Brazil after their drought last year. We also had the early arrival of the annual monsoon rains in India, and also reports of strong monsoon rains in Thailand as well. These are the three of the world's top producers and the leading exporters. Now, India last year, a couple of years had restricted their imports due to supply tightness. So the strong start to the monsoon has people think, well, they're going to have plenty this year to export. It certainly seems like what's going to happen. And but the couple of weather issues have developed that could start to cut into these production expectations. For example, in Thailand, some of the sugarcane areas are experiencing net drying. Rain is needed, but they're not likely to see too much for a while. And in India, yes, the monsoon rains arrived early, and the central and some northern eastern parts have seen heavy rains recently, and more is expected. But drier conditions seem to be creeping in from the south, and we're seeing reports of net drying in parts of Maharashtra and Tamil Nadu, which are both two of the three major sugar-producing areas of the country. Both of these situations, Thailand and India, bear watching.
Thanks, Mark. What could reverse the trend in coffee?
Well, likewise, coffee, we've seen a steady downtrend on this kind of new arrivals of product after a severe supply tightness the last couple of years. And at last week's low, SEP coffee had already declined 33% from its contract high just in late April. And RSI has fallen to 15, leaving the market technically oversold and vulnerable to short covering. What's been pushing the market down? Well, it's been Brazil, first of all, avoiding any frost or freeze threat recently. It managed to survive a cold snap in June without any damage to current crops or buds, and there's no real risk of threatening cold through at least the middle part of next week. Brazil's crop for 25-26, their Arabica crop is expected to be down from last year, but the estimates have been revised higher this spring as they got some needed rain there. And likewise, Vietnam's National Statistics Office said the nation exported 943,000 tons of coffee from March through June, which is up 4.1% from the same period last year. So we're getting relief on the Robusta supply as well. The problem is, though, that Colombia is getting too much rain. The head of their National Coffee Federation said that last week that their excessive rains are expected to lower the country's 25-26 crop by 1 to 1.5 million bags. That is expected to show up in the harvest between October and December. Colombia is the third largest coffee producer in the world and the second largest producer of Arabica coffee. Not as big as Brazil. The USDA has their 2025 production at 12.5 million bags, which was down from 13 million in 2024. And that's all Arabica. Brazil's production, 40.9 million bags of Arabica and 24.1 million of Robusta. So not the biggest producer, but they're an important producer. So we got to watch that rains there as well.
All right, thank you all. Remember, the views and opinions expressed here today on this video are solely those of our guests, speakers, and should not be construed as the views or opinions of ADM Investor Services or ADM. If you would like more information about our brokerage services, please visit admis.com. Thank you.